Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Welcoming today you to another episode of Startuprad.io, this time with a special guest, with a subject matter expert. I would like to welcome Alireza here from Head of Digital Assets from Annerton. Welcome.
Hi, Joe. Thank you for having me today. I'm delighted to talk to you today about digital assets and regulation in Europe.
Yes, exactly. So as always, this is touching a legal topic. This is no legal advice. You should see it as a starting point for doing your own research, your own digging. And this doesn't constitute any legal advice at all. This just gives you a framework how to think about it. Alireza, would you like to tell us a little bit about what you do, what you've done in the past before we get into MiCA, the topic of today's conversation?
Yeah, sure, Joe. So I'm a lawyer. I'm a German-based lawyer. So I'm doing regulatory advice for the past 12 years. I'm advising banks, fintechs, but other players who are entering the German market or who are expanding their footprint from the German market within the European Economic Area. So, and for the past, I would say 8 years, I have specialized with everything related to DLT, to the distributed ledger technology, blockchain. And with that, starting at 2017 with the wave of ICOs, the initial coin offerings coming over to not just Europe, but I would say to the global market, I really specialized in helping players to do crypto business. When I say crypto business, I mean issuing your own token, but also doing crypto services related to banks like trading, custody, and also other things, and also helping fintechs and non-financial players to do joint ventures and to cooperate with regulated players in Europe.
Before we get into the topic, I know at one point ICOs have been very hot. We also had a few here from the area. We interviewed about it. But then it was a crypto winter, and before or after, did some colleagues ask you, what the hell are you doing there? Why don't you do just simple M&A? It gets a lot of money, but also is a lot of work.
Yes, definitely. I mean, you're describing it pretty good. I mean, as I said, I started looking into it in 2014, so quite some time. So I have witnessed all the halvings so far. So, and everything's related to the Bitcoin halving. So either prior or closely after the halving, we witnessed the crypto winter. And I had it many times that colleagues were either laughing about the whole crypto industry or asking me to do some serious business. But I'm not sure why it is like this. Maybe it is my own nature, because when I started being a lawyer, I started with some not plain vanilla project. I started with Islamic banking and Islamic derivatives. So I was always looking for some, I would say, rather adventurous topics. And with crypto and blockchain, I have my own fun, and I would not like to change it. And now I think would say I had a long pref, we say in Germany, long pref. I stayed with crypto, and now it turns out to be also from a economic perspective not such a bad decision to do crypto business and crypto advice.
There's also saying in Germany, was lange dauert, wird am Ende gut. So what takes long will turn out good. Fingers crossed for you that this works. But I have to tell you, at the beginning, I was also pretty skeptical of many, many things, but I do tend to see more and more good, senseful applications of DLT and crypto technology, maybe just crypto assets, tokenization of assets, and really application of this business, of those tools in business, not just doing crypto for be crypto. So that's something I'm seeing, and that's what it makes it pretty interesting to me. But let's dive a little bit into the regulation here. We're talking about the markets in crypto asset regulation, aka MiCA. Since you've been a follower of the digital asset space for quite some time, can you tell us a little bit about the story and what it's all about? The European Union does have a reputation to want to regulate everything. I'm just talking about the banana regulation here. But can you elaborate a little bit? What's the intention behind it, and the process before we get into the regulation itself?
Yes, definitely. So as you just said correctly, I'm looking at into the crypto business for some time, and I think it's also a good time to describe it from a historical perspective. Because when I started with crypto in 2014, everyone only knew Bitcoin. Maybe still some people only know Bitcoin from crypto, but there's much more about crypto assets. You mentioned it in 2017, the ICO hype, and we had lots of pump and dumps, so lots of scam activities. And at the same time, when you say crypto, not that many people understand what is crypto actually, because some people understand under cryptocurrencies, some understand cryptographic techniques just for administration of information on a DLT and stuff like that. So what we had I would say after the first major ICO hypes in 2017, 2018, when it went down, the global regulators, not just the European, they realized that we have a lack of regulation when it comes to crypto. And regulation doesn't mean that we necessarily need to forbid or not allow doing business with crypto. Regulation means, first of all, to understand what is crypto. So to have a harmonized understanding of the crypto assets definition. And before we start to do this podcast, I told you, Joe, maybe we shouldn't call it crypto when we talk to UK or US people, maybe rather call it digital assets, because crypto assets are defined in Europe with this MiCA and a harmonized definition. So when we talk about crypto assets in Europe, we understand cryptocurrencies, utility token, anything which is not already regulated under the existing regulation. When I say existing regulation, people know the securities regulation in Europe, which is regulated by MiFID. So everything which is non-MiFID, which is not regulated under the so-called securities regulation in Europe, is nowadays going to be regulated under the MiCA. So regulation meant from the beginning having a harmonized understanding of the product, of the instrument, crypto assets. And this is something which I also see overseas in the US, or let's say in UK, which is something the first step to do, having a really common understanding what we define as crypto assets. And then the second thing, why we need the crypto assets regulation, or why we started having the crypto assets regulation, also again going back in history, when you look at the ICOs, many people know all of this funny white paper, I would say memes, which you see in the internet. Like you see a zebra in the front, and in the end, a donkey comes out, which is a nice analogous or nice meme of describing how an ICO document looks, a white paper. The first pages, like very illustrative marketing pages, describing you like the nicest zebra you can get. And in the end, you are lucky if you get a donkey. So, and this is really how most of the ICOs went in 2017 and 2018. People got promised lots of nice things, but in the end, it turned out to be maybe a company which is insolvent or bankrupt, and there's no blockchain, no DLT, no nothing. And maybe you also think back, Joe, when all this ICO happened, and then people started putting some celebrities, some movie celebrities as their advisors and their pictures, and then someone saw it and made fun of it and say, okay, nowadays all the ICO companies have all this movie and Hollywood celebrities as advisors. How can it be? And this is something which needed to be changed. So consumer protection, protection from market abuse, scammers, and also having some really reliable players in the market the opportunity to do their business. Because when you think back of 2020, like 4 years ago, Germany was the first regulator putting in regulation, and everyone said this is the end for crypto in Germany. But actually it was the opposite, with Coinbase, the first global crypto exchange player, being the first regulated player in Germany. Many others followed or tried to follow. eToro applied for license. Binance tried the same. others like Kraken and major players are going to follow that approach to be regulated, to be able to provide their activities under a transparent, regulated manner, rather than doing something where no one really knows, is it legal, is it illegal, is it gray, is it white or black?
When you've been talking about that, so the main reason is a protection of the digital asset investors, and the companies regulated should welcome it because it will get more trust to those players, and therefore in the mid to long term also get hopefully a lot of new investors. I do believe that's why all of them are going through the very painful process of getting licensed. I would be able to tell some stories about that, but I can't. But nonetheless, it's not a joyful experience. But you have to see the people on the other side, the regulators, that most of them also don't enjoy it, but they do see the value in it. But you already referenced about MiFID, Markets in Financial Instruments Directive, and now we're in MiCA. So MiFID regulates everything in financial markets, and they just found the definition: everything that's not regulated under MiFID is MiCA. Is that correct?
That is correct. So everything which is not already regulated under the MiFID regime, and it has some, I would say, investment purpose or some purpose to be exchanged or traded on a marketplace or a so-called trading venue, would be highly likely to be regulated under MiCA. And this is actually a good first entry into understanding what MiCA is.
Before we get into that, we should say that MiCA is a European Union regulation, so it applies to all member states of the European Union. Very likely, Norway, Liechtenstein, and Iceland will also follow some way and also get this regulation into their legal framework. And I'm not too sure about Switzerland, but I think they would miss an opportunity if they would not jump on this train and show that their space is also regulated.
Yes, exactly. So the MiCA, the Markets in Crypto Assets Regulation, very important. It's a regulation. Unlike a directive, it does not need to be implemented into domestic law. So it's directly applicable to all member states. Plus, this MiCA regulation is also applicable to the European Economic Area jurisdictions like Liechtenstein and others. So there it is also going to be applicable directly. However, we're going to see also some laws which are called implementing laws or transitional laws, because countries such as Germany or even Liechtenstein, they have already some crypto regulation in place, which is not in line or not harmonized with the MiCA. Therefore, such jurisdictions like Germany or Liechtenstein and some others, they need to adopt or change or harmonize their domestic regulation with the MiCA. So in the end of the day, what we call in the European Union a single market should be also available for crypto assets.
I see. Plus, we should also add that each of those member states has to follow the regulations, but they can also make it tighter with national law and even limit it more. So that would also be possible here.
Exactly.
Can you tell, let's go a little bit into the timeline before we talk about what it means for companies, for entrepreneurs who are active or thinking about being active in the digital asset space. My understanding is that MiCA does not necessarily apply right now to everybody, but there's a phase where more and more of those regulations actually do apply.
Exactly. So the MiCA itself, so the legal text, is already effective since last year, end of June. So since the 30th of June last year, the text has passed all the regulatory bodies, so it is effective. However, it is always like this with EU regulation, that it's never directly applicable. There is a timeline, a so-called transitional period, where the market players, the regulators, and also those who provide their services have time to get used to the law. this is a transitional period which takes up to 18 months. And up to 18 months because we have a two-phased approach. The first phase ends after 12 months. This would be the 30th of June this year.
That's why we are talking today. Yes.
So 30th of June this year, we are going to face the regulation for the so-called stablecoins. This is everything which covers e-money token, asset reference token. So in other words, all those US Tethers and USD Circle and all the coins which have a purpose of being similar to money, e-money, will be regulated already now, whilst the remaining crypto assets like cryptocurrencies and utility token shall be regulated by the end of this year, which will be the 30th of December. So we can say at the latest 30th of December this year in the entire European economic area, if you want to provide services or issue a token related to crypto, you need either a license or white paper. So these are the two things, white paper for issuers and the license for service providers, so-called crypto assets service providers, also called CASPs.
We'll get into that later on, but first let us go a little bit through what MiCA actually means for the entrepreneur. Our understanding is now June 30th, 2024. Some regulations come into force, and at the latest on December 31st, 2024, all regulations apply within the European Economic Area, which is the EU, Liechtenstein, Norway, and I do believe Iceland.
Exactly. And this is the important part. So everyone who is still thinking of doing some activities and it ends before the 30th of June, which is a very short time, can do it now without breaking their heads over it. But if you're planning to do something, even if it starts now, but it takes longer. So you have, for example, you issue a token and this issuance will last, let's say 6 months or 12 months. Then you will definitely need to look into the MiCA regulation and you make sure if you need, let's say, a white paper or if you need to have a CASP, a registered or licensed CASP who is doing these services with you together. And this is something which will not just apply for those living or being domiciled or registered within a European Economic Area. It also applies to those third countries, like let's say you're sitting in Switzerland or in UK or the US, and you're right now providing your services to the European market. This will also apply to you unless you make sure that you use the so-called reverse solicitation exemption. Reverse solicitation, for those who don't know it, reverse solicitation means that if you provide your services, but you're not actively targeting the European market, let's say you're like a US company and you have a web page which is mostly targeting the US audience, but for some reasons, someone from the EU is getting to your web page, asking for the services. In that case, you're allowed to provide the services to the one asking for the services. This is actually a fundamental right in Europe for any retail or for any customer, the freedom to request services. So you're allowed to provide your services to those who come to you by their sole exclusive intention. So you do not ask them to come to your webpage. And then you're allowed to provide the services without having the license. So this is reverse solicitation. So if you put this in brackets or this put outside the scope, everyone else who is addressing the European market needs a license or a white paper.
And for those, how did he call it? Reverse solicitation. Yes, exactly. But we link down here in the show notes to it. Does it mean you have to be a regulated entity somewhere in Singapore, in the US, or in Panama? Or does it just mean you're not directly marketing to citizens of the European Economic Area living there or people living there? And you just can get out of this regulation with this little trick.
So it actually applies to anyone. So any company, any player outside of the European Economic Area, so-called a third country, can provide its services on this reverse solicitation approach. They do not need to be regulated. Maybe they need to, but this is not of interest for the European regulator. The European regulator only is looking at the laws which apply to the European Union. So, for example, if you have a player, let's say from China, and in China crypto asset services are not allowed, this is not important to the German or to the European regulator. It is only important that this Chinese crypto asset service provider is providing its services solely on reverse solicitation and not targeting the European market.
Mm-hmm. So, and now we get to the core of it all. What does it mean for entrepreneurs? First, what do they need to do? I do assume they do have to go to the national regulatory authority, for example, in Germany, BaFin, and say, hey guys, I'm this person, I'm this company, I want to provide those services. Of course, best is it if you have a lawyer who asks these questions. But basically, you have to approach the regulatory authorities best with a lawyer. And hopefully you've spoken to him or her a few times before and they prepped you for this conversation.
Yes, I mean, it is basically how you say it, Joe. You can also check it out. For example, some regulators like the Austrian regulator, they have a very nice webpage, even in English. So it's a financial market authority in Austria, FMA. So if you just put in Google FMA and then MiCA, you will straight get to their webpage and you find some information. So you can go and approach your domestic regulator. You can even go to any regulator. So if you are located in Europe, you do not need to go to your own regulator. Let's say you're in Germany, you do not need to go to BaFin, to the German regulator. You can also approach the Austrian regulator. This is also the nice thing about Europe. We do not really know borders. It is all borderless. It also applies if you have a license for your activity, you can provide the services to the entire European economic area, which is called passporting. Yeah. So the first step you would do, you would first try to understand if your product or your service is regulated under MiCA. You can ask, for example, for a so-called no action letter. No action letter means that the regulator confirms to you that, for example, you're not regulated because your product is for some reason not under MiCA and not regulated at all. Or
that
you
means
can look.
You don't need to take action, right?
Exactly. Yeah. Or you also have to differentiate. We differentiate between the issuer. An issuer is someone who is issuing a token, so doing an ICO, for example, from those who provide services, which is a crypto asset service provider. A crypto asset service provider is, for example, someone who's running a crypto exchange or doing the custody for crypto assets, whilst the issuer can solely do the ICO and not doing anything else. Yeah. So if you only do an ICO and you do not do anything else, you usually do not need to have a license. What you need to do is you need to have a document in place, a so-called white paper. And this white paper, I said it in the beginning, is not this funny marketing white papers you had back in 2017. It is a very formalistic and standardized document, which needs to look exactly as the regulator is telling you it has to look. But now it comes, this document does not need to be approved or accepted by the regulator. You only need to notify the regulator, which means 20 days before you want to go live with your ICO, you send the final document, your final white paper to the regulator and tell the regulator, look here, I'm planning to do an ICO in, let's say, in 20 days. This is the document me and my lawyer, we have finalized. Have a look at it and then publish it on your webpage. I'm going to do the same on my webpage, and then I'm going to go live in 20 days. Then maybe the regulator comes back to you and says, you're fine to go. Or the regulator says, are you really sure that your document you have produced is in line with the standard and you have not forgotten something? And I think that the regulator will do this in the beginning, and after some time, the regulator will not do it anymore because the regulator is really not in charge for accepting or reviewing the document. Yeah, they would just collect it and have a look at it and see if it's really complete. Yeah, and these ones you have to differentiate from those who want to provide a service, and the one who want to provide a service, they really need to have a license, and they apply for the license, then they get the license, and then they can provide their services to the whole European economic area. And this is two different categories of players in the market: the issuer and the crypto asset service provider. So white paper and the license.
From your personal experience, as lawyer, as a partner with Annerton, how long should an entrepreneur estimate to finish this white paper with a lawyer? Is something like 12 months or 12 days?
So we have nowadays some tools which are available free to use in the internet. So with such tools, everyone can produce its white paper within a couple of days. However, the detail work, the fine parts, which are also critical things which may raise liability. I talk about civil liability for the issuer. This may need a little bit longer, and also the description of the technological background of the blockchain user, DLTUs and stuff like that. This could take a little bit longer. So I would say anyone who wants to do an ICO nowadays and plans to do it for the next 2 or 3 months should plan with 2 till 3 months in advance. And 2 to 3 months, I think that's a good timeline, and then do that. However, now it comes. There's one category of token, which is the stablecoins. For the stablecoins, either it's an e-money token or an asset reference token. Not everyone is allowed to issue such a token. For example, an e-money token, you're only allowed to issue if you're an e-money institution. This is a licensed player. Asset reference token, you should be a bank or to have a license as an asset reference token issuer under MiCA, which is very close to a bank. So for these two categories, like the stable coins under MiCA, you should be aware that only a white paper is not enough. You need to make sure that you have to be an e-money licensed company or bank. Yeah. And this is something special.
Okay. Let me try to work this out a little bit. So, what I want to say, what you already said, is you get this white paper to the regulator. They don't have any objections, but it still does mean you are liable for everything that is in there. It's an important legal document, and just don't Google the pieces and put them together. Ask a capable lawyer, please, guys. On the other hand, as you already referred, there are these service providers, crypto asset service providers. So that means as an entrepreneur, you can still do your ICO, you prep your white paper, but then you do have to work with people who are licensed, providing all those services. What I, for example, do have in mind is somebody safekeeping of the assets of the cryptos on the digital assets on behalf of the investors, something like a custodian bank has done in the past. Also, as you said, stable coin. That means one of your coins refers to €1. Then you're in a much higher regulated field. Then maybe you should more think about 3 years than 3 months of preparing this. Plus, if you want to be, as you said, an asset reference token. So that means I do believe it refers to tokenization of securities, right? So it simplifies the securities trading, especially in the European Union, but I do believe soon across the world, where you just have a crypto token that is traded, that is buzzed around on behalf of a physical security, of a share, of a bond, of something else, right?
Yeah, so you're almost 100% right. So you could be easily a lawyer, Joe.
No, lawyer, please.
So the e-money token is a token which refers to one fiat currency. So you could be, for example, a US dollar token or US dollar currency. Yeah. So USDC, for example. Yeah. In contrast to that, the asset reference token is referring to at least 2 instruments which are in the portfolio, in a bucket. It could be a currency. It could be, as you said, a security. It could even be a cryptocurrency, which is lying in the bucket. Yeah. The best example for that is the US Tether. If you look at the US Tether and you look at the basket of instruments which lie with the Tether Foundation, you can see there are, I think, 6 or 7 or 8 different assets, even gold and some other assets are lying there. And so if you go back with your US Tether to the Tether Foundation, you can even get, instead of cashback, you can get, for example, gold or a US dollar bond or something like this. You can redeem that. And as you just said it correctly, if you have such an instrument and it's backed by some assets where this asset really needs to be there. So with that, you guarantee the stability of the coin. If you look from that perspective, then you really understand why not everyone is allowed to issue such a coin. So otherwise, I would say the scamming industry would just rise with this possibility. Therefore, there is some reason why only e-money institutions or a bank is allowed to issue such a coin.
So bottom line is for me right now, if you want to do an ICO, you need to look at what services you want to provide with the token and have somebody who is legally able to provide all the services around it. For example, issue interest, dividends, and so on and so forth. Everything you want to do with that, everything that need to be serviced, you need somebody who's licensed to do that. And of course, stable coins or asset reference tokens. It's a completely different ballgame here. What other regulations do apply if you do want to ICO a token? For example, what there are like a zillion things such a token can do. We now know it cannot reference to so-called fiat money that's official currencies. Think Japanese yen, Korean won, Brazilian real, US dollar, euros, pound, and so on and so forth. Plus also securities, I do believe.
Yes, I mean there's a very complex list of rules and obligations, and as you said, we really have to differentiate. So if you're the issuer, for example, and you want to issue you're an e-money token issuer and you want to issue a euro-backed stablecoin, for example, you're not allowed to issue interest. You're not allowed to pay interest to the users, and you're not allowed to take the money and work with it. That's forbidden. Yeah. If you have asset reference token, you are allowed to do that. You're allowed to work with the money and to pay out interest. Yeah. But then again, there's a bucket of so-called significant e-money token. A significant e-money token has the exemptions which apply to asset reference tokens. So significant e-money token, you're allowed to take the money which you receive from the users or from the investors to work with that and to pay out interest. However, you have to you're not allowed to take all the money. You have to keep, let's say, 30% as a risk buffer available, similar to a bank, which keeps when it gives out loans like 12% or 19%. Yeah. And these are things which are very detailed, very complex. That's why I would say we should not talk that much about the stablecoin issuers. Maybe we go on and talk about the cryptocurrencies and utility token, because I would say we see much more of those coming. And also maybe related services to them, like a crypto exchange, as you said, a custodian, like a safekeeper, crypto portfolio management, crypto advice, all of that things which are also coming, which are not necessarily dependent on the issuance of the token. You can also take an existing token like Bitcoin or Ethereum or others who are already existing and provide services to them.
Sure. That would be the next part, because I just want to get like the big guys out of the way to get to this area. So we already talked about like the custodians who keep the token safe, the exchanges where you can basically trade them. Can you talk a little bit about how the European Union envisions such an environment, such an ecosystem with the regulated entities? Because as we said, you have a crypto token, you have a utility token that we now go on a little bit to talk about, where you basically explain the MiCA world to us, right?
Yes, exactly. So basically, you can say really as a rule of thumb, or in a nutshell, when you have a stable coin, like an e-money token or an asset reference token, the highest regulation applies out of MiCA. If you have a utility token or cryptocurrency, the regulation is less tough, less strong. Yeah. And therefore, which is actually, I would say also strange, because if you look at the MiCA timeline, as I said in the beginning, from the beginning, the rules on the stablecoins apply from the 30th of June this year, whilst on a less critical token like a currency token, utility token, the rules apply from the 30th of December. Yeah, I believe honestly they did it like this because if you think back, when Facebook wanted to issue its own token and to do their own wallet, like with DM and Libra and all of that, the European regulator was very nervous about that, and they wanted to have very quickly a regulation in place to cover the Facebook Libra/DM association project. However, as you all know, they have left Switzerland. This project was never launched in the European Economic Area, and therefore I think we're a little bit too fast with the toughest regulation, which is the stablecoin regulation. I think we should have done it other way around, to have the regulation for utility token, currency token apply first, so that people get used to that. You always start with the easier things, and then to have the stronger and the tougher regulation later coming. So I think this was already a wrong move of the European regulator. However, it is what it is. Therefore, we also started talking about the stablecoin regulation before we go on with the utility token and currency token. However, as you were asking how the regulator, the European regulator, but also the national competent authorities, so the domestic regulators, envisioned the regulation of crypto assets, I think they really envision it as having one industry of utility token and cryptocurrencies, like what we already have now, like with all the crypto exchanges like Binance, Coinbase, and so on and so on. This is like, I would say the old game with new rules. And then we have the new game, which is the stable coins, which is a tough regulation. So the new games with new players such as e-money institutions and banks who will be regulated very, very tough. And I think basically the regulator imagines this new product in this new world to be in the hands of the existing players, like the existing banks and the existing e-money institutions, because they already have a license. So for them to issue this token like a stable coin is not that difficult. They only need a white paper and they can start doing it. While it's a startup like Circle or even Tether, if they want to offer their stable coins to the European Union or to European market, they would need to first to apply for a license, which takes very long, which is not that likely or not that easy to get. And then they would be happy to continue providing their services to the European Economic Area. I would, in my position, if I would be US Tether, probably this is the reason why Tether is not really entering right now the European market. Think of, is it worth it? Is it worth it to enter the European market or to continue in Europe? Maybe I should just continue with Africa and Asia and I don't know, Middle East, where you do not need to have a stable coins regulation license.
I see. So a lot of interesting thoughts in there. So basically what the European Union is trying to do is all digital assets that are close or very similar to financial services, push them towards financial services. And there is some that are left, and basically that's a space you can move in as an entrepreneur. Did I get you right somewhere here?
Yes, you got me right, Joe. So if you're like from the DeFi sector, or you're like from the sector where you have always issued utility token, the European regulator is fine with it, that you can continue with that. Just make sure that you have your white paper in place. And if you want to provide custodian services, or if you want to provide a platform, a marketplace where people can trade your cryptocurrencies in a utility token, make sure that you have a license as a CASP. Yeah, that's basically it in a nutshell. And we should not forget why we have all of that regulation. And this is, I think, very important. The origins of regulating crypto assets, like the origins also of regulating all of financial instruments, comes from the anti-money laundering rules and obligations, which are suggested on a yearly basis by the Financial Action Task Force, by the FATF. And the Financial Action Task Force, if you think back, it was in December 2013 already, was the first international body which said we need to have regulations in place for virtual assets, for virtual asset service providers. So if you want to understand how the regulation evolves or develops for crypto assets, always have a look at the FATF. Always look what the FATF is recommending. Always look what the FATF is publishing. It all goes hand in hand. So anti-money laundering rules and regulation of service providers goes really hand in hand.
So that means basically it's not necessarily all the questionable things that have been going on in the digital asset market that have been triggering this, but money laundering, tax avoidance, terrorism financing, those have been the harder pieces. And that's why everything was pushed towards regulated entities who already have to comply with the respective regulations there.
Exactly. And this is we call it the so-called obligated parties, or some would say intermediaries. And this is actually exactly what the DLT, the distributed ledger technology, does not want to have: intermediaries. Yeah. So it doesn't really match or fit, but somehow the regulator is trying to match it and to fit it, or to make it be fit. And this is also the reason, for example, why if you have a pure DeFi, so a decentralized finance player, which is not having any intermediaries, this player will not be regulated by MiCA, because the MiCA is only applying to intermediaries, to people, to obligated parties. If there is no intermediary or no one who has the stakes in hand, such as a really truly decentralized finance environment, then the MiCA is not applying.
Alireza, I would say those are really interesting closing words. We're running already around 40 minutes for our recording, which is a little bit on longer side. Nonetheless, I hope to have you back pretty soon. And then we can talk about some other, legal framework here that our audience needs to be aware of.
Great. Thank you, Joe. If anyone is interested to tune in, we have also a webpage, paytechlaw.com. Check it out. Or if you want to connect with me on LinkedIn, I'm very active there. Just connect there. Thank you, Joe.
Totally my pleasure. Everybody who'd like to learn more, go down here in the show notes. There's a link to Paytech Law as well as to your LinkedIn profile and your company website. Have a good day. Bye-bye.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.